JP Morgan, with control of the pricing structure, has really wedged silver into a corner on the weekly chart. There is all sorts of resistance between about 1580 up to 1720 that it is going to be really, really difficult for silver to get through there. In fact, I've been telling people at TF Metals Report, I think the GSR could go to 100. People think, oh, what? Yeah, you could get $1,600 gold and $16 silver.
Ladies and gentlemen, welcome to the special interview. Today we have a returning guest to the show, Craig Hemke. Craig runs tfmetalsreport.com, and I got to tell you, if you're looking for the best blend of both technical and fundamental information to stay on top of the metals on a daily basis, Craig is able to do that. But not only can he do that, but he has an incredible lens that he can zoom out wide and talk about what's been going on with gold and silver over the decades, over the months, but he can also zoom in real close to the tick-by-tick action and tell you what's going on with the charts intraday. He offers a ton of free stuff, but if you really want to maintain your knowledge of gold and silver, I would suggest subscribing to tfmetalsreport.com. Links will be in the description below. Craig, thank you again for joining us on Silver Doctors.
Well, thank you. I appreciate that introduction. Yeah, it's only $12 a month, so it's like 40 cents a day to stay on top of things. And the community's great too. That's probably more value there than anything else. So anyway, thanks for the intro and all those kind words. I appreciate it.
That is cheaper than Netflix, and the information you get is way more valuable, Craig.
Thank you.
Craig, over the last few days, what has been on my mind is, has the cartel lost control of gold and silver? There's a lot of big names that have been coming out that are saying that the cartel has lost control of gold and silver. But then there's also been some big names saying that, no, they're still in complete control. I was thinking a couple weeks ago was a critical week for gold to stay above 14 and silver to stay above 15. They did that. So I just want to get your thoughts on, when you've been thinking about the markets and gold and silver over the last few days, what has been on your mind, and how do you think, how much control do you think that the cartel has with the metals right now, Craig?
Well, they certainly have not lost control, whatever the folks are saying. That'd be foolhardy to think that. The only way that eventually happens is through physical demand, because the debt or the derivative-based kind of fractional reserve system that they've used to price the precious metals now since 1975, is still intact, and nobody is forcing their hand. We're going to need a run on physical at these banks that have taken physical gold and physical silver and leveraged it and hypothecated and rehypothecated and, however many multiples of times. So the banks still have control. I wouldn't even question that. They issue the contracts, they make the markets, and they have infinitely deep pockets, which means they're not subjected to margin calls and margin pressure like speculators and hedge funds are. They made a boatload of money over the last 5 years, just simply managing price in a range between 1150 and 1350. They'll make a boatload between 1350 and 1550. They'll make a boatload between 1550 and 1850. It'll take that physical demand to break their system before they ever lose control. So we'll start there. But the main thing driving price is something we've been talking about at my site since last November. If you recall back then, it was all about, Jan Hatzius at Goldman Sachs was talking about, 4 rate hikes this year, and all the, 7-figure fancy pant economists that they bring on Bloomberg and CNBC were, talking about 3 and 4 hikes and normalization of the Fed balance sheet and all this other garbage. And at the time, it reminded me of where we were in 2010, which was shortly after I got involved in all of this. And the story back then was that, there were green shoots everywhere in the economy, and we were emerging from the rubble of the financial crisis, and the economy was growing again, and QE was a one-off, and weren't the central bankers just these geniuses? There was even a magazine, what was it, Fortune or one of the others, that showed Ben Bernanke and labeled him a hero.
The Atlantic, I think it was the Atlantic.
That's what it was. Yeah. Come on. But that was what we were being fed, was that, they saved everything. These wonderful, benevolent, altruistic masterminds, saved us all from our, the doom that we allegedly created, which none of that was true. Okay, so anyway, as 2010 progressed, GDP began to slow and it went from 3% down to 1% by the fourth quarter of 2010. It was negative. By the first quarter of 2011, it was negative again. So there you go. Now we're in recession. The Fed acted, all the central banks acted, and they showed they didn't have control. They just began QE2, and more debasement of the fiat currency. That was when gold and silver, kind of got their act together, and people started asking for it in all its forms, futures, ETFs, mining shares, whatever, and everything soared. Folks remember that. Well, the last 6 years, we've been told now that here they've got it all under control again, right? There was gonna be balance sheet normalization, as if the Fed's balance sheet was going to go back to the $1 trillion that it was in 2007. That was never going to happen, and interest rates are going to go up to 6%, even though that would crush the consumer, but also just exacerbate things like interest on the national debt and that kind of stuff. That was never going to happen either. And now the yield curve's inverted. Global economies are slowing everywhere. We got $13 trillion of negative yielding debt, all these things. And now the central bankers, just as in 2010, are being exposed for just being charlatans. They're just pretending, they're snake oil salesmen. They're riding into town saying, yeah, drink this elixir, it'll cure all. No, they're being exposed again. Gold is finally sensing that. The bond market continues to rally as interest rates fall. And that's why gold is now finally breaking out. And we are now moving back into that phase of 2010, late 10 and 11. So it's not a whole lot more complicated than that. But to get back to the original point, though, the banks haven't lost control. I wouldn't want anybody thinking that.
Mm-hmm. Thank you for that answer. When we're talking about the global economy and the recovery, there seems to be mixed messages about the United States has a strong economy or does it not have a strong economy. What are your thoughts on that, Craig?
Well, I guess we'll just take the measurements at face value because one, we got to say, well, what about all these statistical guesses that are put out there, like the jobs report? That came out the first Friday of every month, the most recent one, 10 or 11 days ago. We were told, oh, wow, look at this. U.S. economy is doing great because there were 224,000 new jobs. And all of the, ADHD riddled traders and people in the media and everybody else, that's just the only thing they ever swallowed. Oh, 224, mark it down, check it off. That's the only thing we need to know about that. Well, wait a second. Hold on just a minute. You start drilling into that and you realize that half of those alleged jobs are just statistical guesswork based on what they call the birth-death model, which is in June's past, so many new businesses were birthed and so many other existing businesses died. And the net result in June's past was 100,000 new jobs. And so they just assume that's what happened in this June as well. Well, wait, seriously? So half of those jobs were birth, death model, imaginary jobs. And then the rest of them were all part-time jobs from poor saps that are, lost their good paying full-time job and now have to replace it with 3 part-time jobs, delivering pizzas and Ubering, and working at Home Depot and all the rest. So on the surface, you're told, oh yeah, look at this. This is great. But it's all just statistical guesswork. So I would prefer to look at, you look at things like PMIs, global manufacturing, and frankly, just talk to your neighbors, look around, it's pretty clear that this idea that the economy is booming, if there was any growth right after the election of Trump with the tax cuts, that's worn off. And then in the end, Paul, here's the other thing, and this was all part of our forecast for this year, all of this trade war stuff, to the extent that it all actually plays out, but it creates uncertainty. And if you are a business owner, whether you have 50 employees or 5,000 employees, you need certainty to make plans. You need to have some idea what your input costs are going to be. Let's say you make, I don't know, I'm looking at some new construction across the way. Say you make that metal HVAC stuff, for air passageways in a house, or commercial property. Well, you don't know what your steel prices are going to be because of these tariffs. And if you don't know what your input costs are going to be, how can you make a decision to expand your operations or hire new employees or anything like that? That uncertainty just, kind of cuts your legs out from under you. And that's what U.S. manufacturers are dealing with. And so that type of thing brings on a slowdown. And then lastly, the other thing that goes with it is the inverted yield curve. maybe we're in, because these charlatan central bankers, maybe we're in some, brand new uncharted economic territory where nobody knows what means anything anymore. But historically, if interest rates on the short end are higher than interest rates on the longer end, which is an inversion of what we call that yield curve, that has always led to recession. And that's where we are. And that's why the Fed's talking about cutting rates so that they can try to flatten out the yield curve. That's always led to recession too. So putting that all together from the fake and statistical nonsense of the data to what's going on in the real world to the inverted yield curve, yeah, we're definitely in a slowdown and headed toward recession. And these central bank policies they're just going to go back to their same old bag of tricks to try to stave it off.
I'd like to add something on top of that because a lot of times people say, well, they accuse me of, oh, you're just exaggerating, you're just this fear monger out there spreading doom porn. But I've seen this, right? I've experienced exactly what you're talking about with the trade war personally, right? Back in 2000, I think 14 or 15, or maybe it was 16. No, it was like 14. Anyway, I was doing an internship with this multinational company, world-renowned company that makes wiring harnesses for like airplanes, automobiles. I mean, this is really like high-tech stuff. It's fabricated. I was in El Paso at their factory there. And their North American headquarters were in Chicago, and they were in the process of moving them down to El Paso, Texas, because, in my opinion, they were doing it because wages and labor and all sorts of things are much cheaper in El Paso, right there on the border. But interestingly enough, at the time I was there in El Paso, the company was shifting to, I think, Guadalajara, or I'm not exactly sure which state, but they were shifting their operations to Mexico, right? But these are things that are years in the making, years in the design, and these are multinational companies that we're talking about. So when you're saying that it creates this uncertainty, absolutely. And when we're talking about, oh, well, they're just going to bring the jobs back, it is not like that at all because these plans have been set in motion. And even if these jobs would come back, it would take years and years and years for this turnaround to happen. So, people like to say, give me a specific example of that. Well, there's a specific example of that right there.
No
So
doubt.
I just
And it
wanted to,
becomes, and it becomes kind of self-fulfilling. I mean, that expectation leads to economic slowdown, which then leads to even lower expectations. And I mean, the thing just cycles. It's human nature more than anything else. Study of economics, which a long time ago I got a degree in, is a lot about human nature and anticipating which direction, and repeating of cycles and anticipating which direction, we're going next, that kind of thing. So again, the most important part is there was this, I don't know, what do you want to call it, illusion put forth, and maintained by the media that the central bankers are all knowing and all powerful and that they had rescued everything. And that, oh, aren't we blessed to have them in charge of everything? And now everybody waits with bated breath, even when there's some totally obscure Fed governor, from the Federal Reserve Bank of Minot, oh God, what did he say? He was at a luncheon of the Minot Rotary Club.
yeah.
And what did he say? Oh God, that's going to move when did that happen? When did these people become the final driver of all of this? It's all nonsense. But they got to create this illusion that they know what they're doing. And by ushering in the exact same responses, more QE, lower negative interest rates, all that kind of stuff, even on steroids, if you will, from what it was 10 years ago, they're revealing their impotence. And that, again, is what the bond market is sensing, and that's what the gold market is sensing, and that's why we are breaking out, just like I thought we would this year.
Um, uh, I want to get to the breakout in just a second, but when we're talking about that, I want to move back to the manipulation for one point, if we could, in the
Okay,
conversation,
sure.
because I want to clarify this up because I have this theory that Hollywood movies are tightly controlled because if you want to get the nation or the world for that matter to think a certain way about a certain issue, well, you produce a Hollywood movie because there's not that many movies that come out a year, right? So it's easy to control Hollywood movies. There's, a few dozen that come out a year. I'm talking about major big box office movies.
Right.
My point with that is it is easy to control something by just doing a couple things, right? In this case, just releasing a few different movies a year. You have said that it's easy to control gold and silver markets based on just controlling a few different inputs. In the past, you'd spoken about And actually, you discovered, right? You're the one that discovered the relation with the currency pair carry trade between the U.S. dollar and the Japanese yen. Then for a while there, we were also talking about possible pegging of the dollar price of gold with the US dollar Chinese yuan currency trading pair. Now, what I want to get from you is kind of two things. First of all, could you just explain how easy it actually is to manipulate these markets? That's the first of all. And the second thing is, what are you looking at right now as far as the inputs that are being used to do the manipulation? Have the dynamics changed? And then that would obviously lead into what targets are you looking at for silver. But if you want to, jump on the manipulation questions first, I would really love to hear what you've been looking at, and if you could also explain why you're looking at those things because of just a few inputs being able to move these markets.
Well, at the end of the day, Paul, it's all about algorithms, computer trading algorithms, and high frequency trading. That's what has simplified this for the banks primarily, acting sometimes at the behest of the central banks or whatever, or if they're just doing it for profit. But it's when everything's done by computer, then to move markets, you just need to impact the inputs that the computers monitor. We see this in the stock market all the time. Two of the key inputs in that computer decision-making process, if you want to call it that, are the dollar yen and the VIX. And so when we talk about, you go back to New Year's Eve or Christmas Eve last year, and the stock market's going in the toilet, and Secretary Mnuchin calls the plunge protection team together, which is a legit thing, the president's working group on financial markets. And he actually did call them together on Christmas Eve, and they all met. And then the very next freaking day, I mean, markets are closed for Christmas, and then the very next day, the Dow goes up 1,000 points, right? Imagine that. And now the S&P's up like 700 points or something since then. How do you get that to happen the very next day? Well, you affect those inputs. You don't have to go out. The central banks don't have to work in concert to buy all of the, Apple and Amazon and Netflix all the way down the list. They don't have to buy the shares themselves that cost a lot of money. They can just manipulate that currency pair. They can just short the VIX. And then all of these computers do all the heavy lifting for them. And so this type of manipulation is made possible by the degree to which high frequency trading computers control everything now. It's 90, sometimes as much as 90%, a lot of days 80% or more of the volume on the New York Stock Exchange is just this high frequency trading computers, just swapping positions back and forth, trying to nick each other for fractions of a penny. So if you get the computers to do the heavy lifting, that's how you get things to move. So back from 14 through about early 18, maybe late 17, there was an obvious direct correlation between the dollar yen and the price of gold. And anybody could chart it. You could just see it. Now, whether that was set up by design, the banks just had the computers running off of that, it's all subject to speculation. That has since kind of faded away. Then there was this direct correlation for about a year and a half with the yuan, as you mentioned. And so were they both moving in tandem to the same stimulus? Or were, somebody moving, kind of pegging the two together so it would be easy to manage the price of both? I wrote a lot about that last year. I never really got the answer, but we've also seen now that correlation has kind of faded to the wayside as well. And at the end of the day, is that all done on a level to where you manipulate gold and silver, like how the stock market can be? I don't know. It'd be interesting to know. All I can do is just observe this stuff, see that it's happening, try to warn people, and project where prices are headed. If you can kind of project where something else is going, then that can kind of give you enough idea of where gold might be headed. But at the end of the day, the banks manage and manipulate the prices, one, for their own profit. Okay, they used to do it, I think, for the central bankers. GATA has reams and reams of data showing that. At this point, I think the central bankers have bigger fish to fry. I don't think they really give a damn anymore. I think the banks just do it because they make a lot of money doing it. And they'll continue to do it, no doubt about it. And they do it because they control the pricing mechanism. They act as market maker on the COMEX. The bullion banks act as the physical conduits in London, so they know, all about the physical order flow and where the orders are and all that kind of stuff on a daily basis. And so then when I boil it all down, one last thing is how the JP Morgan manipulates price on the COMEX. Can I talk? Do we have time? I'll just kind of draw that out real quick. Mm-hmm. Back in 2011, JP Morgan didn't even have a vault. Now, a lot of people assume that they assumed this massive short position from Bear Stearns. Maybe, I don't know if they did or not. But in 2011, the majority of that move, especially the latter part of that move, was commercial short squeeze. We know that just from following the CFTC data, the commitment of traders reports and stuff at the time. Well, if you connect those dots, and this idea of JP Morgan having this naked short position, they were getting squeezed, and they didn't have any silver that they could deliver. All they could do was cover, and that was costing them a lot of money, and price was spiking. Well, in March and then into May, they were immediately approved for a COMEX vault, like rubber stamped. And now, of the 300, it used to be 150 million ounces or so was the size of the COMEX vault. Now it's 300 million. Well, why is that? Because JP Morgan has 150 million ounces that they've accumulated through the delivery process over the last 8 years. So now they've got monopolistic control. They've got more than half the silver in the vaults, and they can write up to 30,000 COMEX contracts against that and call it a hedge so that CFTC never says anything. That gives them monopolistic control of the pricing structure. And that is, these guys that are just technical analysts and stuff and chase a dot on a screen, that's something they never will take the time to understand. But that is the big key determinant of the price of silver at this point, is how JP Morgan manages that position.
Yes, thank you for that. We're running out of time here, Craig,
I'm sorry.
for today's interview. But I would just like to get your closing thoughts on this one specific thing that has been on my mind over the past couple days. And that is, what do you make of all of the President Trump tweets about the dollar, especially the references? We've seen this twice, the exact terminology, to pumping money, right? Wanting to pump money. Yeah. And also, what do you make when we know that these trial balloons for Fed picks, such as Herman Cain and the most recent one, Judy Shelton, who's supposedly a gold standard advocate. So in closing thoughts today, Craig, what do you make of the dollar tweets in conjunction with the Fed picks? Because it seems like they're diametrically opposed things to do and say to me. What are your thoughts on that, Craig?
Well, that gets back to manipulation too, because people say, "Oh, that's crazy. How could gold and silver be manipulated?" Well, look, there's admitted manipulation in all these different global markets, whether it's the foreign currency markets where central banks intervene all the time to manipulate the value of their currency versus the dollar or some other currency. Quantitative easing plans are nothing but bond market and interest rate manipulation. We know about LIBOR manipulation. And so, this is just how it works. Specific to foreign currencies, it's alleged that the U.S. would never do that. They'd never try to manipulate the value of the dollar because, well, it's a reserve currency and all that stuff. But again, other central banks have been doing this for years. That's what Trump is acknowledging. And so when he's talking about lower interest rates, he's thinking that implies a lower value of the dollar versus the other fiat currency. But they're all being devalued too, and so it's kind of a race to the bottom. But Trump, as a businessman, has this, he thinks he has maybe an intrinsic understanding that a lower dollar is good for exports and economic growth. And that's kind of a Keynesian thing. And I think that's what he's trying to promote by saying that. And he's trying to jawbone the dollar lower without actually having to do anything, to not actually have to go out and say, we want a lower dollar or whatever. It's a race to the bottom in that regard. And so if you look at the gold price as a proxy versus fiat currency, we're talking about gold breaking out in dollar terms. Well, gold is already at near all-time highs in almost every other currency, whether it's the British pound, the Australian dollar, Canadian dollar, Indian rupee. You just go across the board. Well, why is that? Well, because they've all been devalued versus gold, or they're weak versus a dollar. Well, now if Trump's gets his way, or if the Fed starts cutting, then it's going to be the dollar's turn the barrel. The dollar's going to get weaker, and gold priced in dollar terms is going to surge and catch up to all-time highs too. So you're wise to follow that. You're wise to think of the implications of an official policy of a weaker dollar, because all that combines with all the other stuff we've just talked about, Paul, to mean that precious metals prices are headed higher in the weeks and months to come.
And final thought, what's the price target you're looking at for silver for the breakout, or you looking at any price targets here in the short term, say next month or two?
Well, it's pretty low, actually. JP Morgan, with control of the pricing structure, has really wedged silver into a corner on the weekly chart. There is all sorts of resistance between about 1580 up to 1720 that it is going to be really, really difficult for silver to get through there. In fact, I've been telling people at TF Metals Report, I think the GSR could go to 100. People think, oh, what? Yeah, you could get $1,600 gold and $16 silver. Eventually, a substitution effect will play out, just like people stop buying steak and they buy hamburger. If gold keeps soaring, which it will, people are going to say, well, this is ridiculous. Silver has to catch up, and then it will break out, and then it'll kind of build on its own momentum and stuff like that. To begin with, though, watch those levels. 1580, something I've been wondering about now for the past month, but the 200-week moving average is around 1620. That's been enforced as resistance for the last 3 years. There's a trend line that goes back to 2013 that's up around 17. There's massive resistance near 18. Once you finally get above 18, and this ain't going to be next week, Paul. I mean, once we get above 18, then we can go, okay, now the game's on again. In the meantime, I'm more excited by gold. I'm more excited by trading gold, gold miners, stuff like that, than I am by silver. But silver will have its day. It's just not yet.
Turd Ferguson, tfmetalsreport.com. Craig, thank you again for joining us today on Silver Doctors.
Hey, thanks for the mic, my friend, and let's do it again soon.
I directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
Sure you did.